banking panic of 1907 created what we call today the Federal Reserve. Banks were scattered everywhere throughout the country. Most of those banks were small, local businesses, and when panic set in, it spread quickly, rapidly, and would cause huge depressions, failing businesses, bank runs. This was the reality of the 19th century and the 20th century, but that all changed starting in 1910. The United States experienced frequent banking panics. 1873, 1897, and then the severe panic of 1907, which actually ended up being saved by a man named J.P. Morgan, who ended up pooling together funds to bail out a bunch of other banks across the country, propping up the system and saving a lot of the economy. The crisis made one thing clear to them: America needed a more efficient way to manage the monetary policy, especially in times of crisis. The key moment that changed everything came in 1910 when a bunch of policymakers decided to go to the club at Jekyll Island down in Georgia, posed it as a duck hunting trip and avoid public scrutiny, and they drafted what would become the central banking system. The initial Aldrich plan proposed a central institution that would control all of banking, control bankers, but it faced a lot of really strong pushback. A decentralized banking system with 12 regional banks overseen by a government-appointed Federal Reserve Board that sat in Washington to make sure that no banker control or government control exerted too much dominance over monetary policies. In December of 1913, President Woodrow Wilson enacted the Federal Reserve Act. The original goal was pretty straightforward: provide a more elastic, flexible currency that could expand and contract with the economy's needs, serve as a lender of last resort during crisis, supervise and stabilize banking system as a whole. The Fed's role ended up expanding, especially after the Great Depression and World War II. The expansion ended up including monetary policy for maximum employment, stabilizing prices, moderating long-term interest rates. But today, it really remains the guardian of financial stability within the US economy. The Fed was not created in a vacuum. It was the hard-won solution to creating stability. Compromise between public oversight and private expertise. More than 110 years later, we're still shaping our economy around their policies. Next time, we'll have some more fun. We'll get into some conspiracies around what actually happened with the Titanic and some of the original founding members of the Fed. Stay tuned.